Well, hello there. How are you? Welcome to Ensuring Your Well-Being. This is Dennis James, the bike and dance and insurance man with various insurance planning. And I am glad you're here today. It's going to be a great day today. It's going to be a great topic, and we're going to learn a lot and enjoy ourselves. So why don't we get started here? All right, today's topic is going to be on, it's called short-term medical plans, policies, and the focus is going to be on home health care and facility care. And with those types of plans, there also is individual policies that we could talk about, but mainly I want to focus because of long-term care insurance. We want to talk about these types of plans, the advantages like getting a home health care policy. And when I say short term, these are normally policies that are going to cover you for a year. Now, from a lifetime point of view, you could use it for, a couple years, depending on how you're using the benefit. All right. One of the things with these types of plans, they're affordable in a lot of cases. Their underwriting is a whole lot different than you would receive if you were applying for, let's just say, a traditional long-term care policy or a what they call a linked benefit, a life insurance with a extension, a new long-term care insurance on it, or a long-term care rider. And so that's what I want to get into here, because of the underwriting is very minimal. All right. So if you're struggling with certain health conditions that maybe you would not be insurable for when it comes to a comprehensive traditional plan, or life insurance with like that rider, then this could be a great fit for you. For one thing, it goes up to a lot of these policies, they'll go up to age 90. So that's for sure. You're not going to be getting those policies with a traditional plan. Normally, those will cover you up to usually 79. The thing with any type of insurance is always better to get it sooner than later. When we're talking about these kind of home health care policies or these the facility plans or those types of plans, usually it's age 35 to 89. All right, so that can tell you a lot right there, because as we get older, we know that our health can change. Obviously, it can change at any time. You don't have to wait till you're 35. It can change at any time, any age. So one of the things with that, like I said, is lenient underwriting. It's going to be 1 to 3 questions. It's going to be simplified, what they call simplified underwriting. And a lot of times what they're going to be asking you is, are you confined to a hospital or a nursing home? Are you receiving hospice care? Or in a wheelchair? Those types of questions. Or it could ask one of the things that can matter. Have you had a heart attack in the last 12 months, or heart surgery, or any kind of kidney failure or stroke in the last 12 months? A lot of times, if that's the case, you may or may not get a policy. It depends on the insurance carrier. Or they'll put what they call pre-existing conditions. All right, they're going to take you, but they're not going to cover you for, the first 12 months. It could be 6 months. It could be 12 months. And then, if you have no issues, then, of course, the policy will kick in for that particular service. That doesn't mean it's not going to cover you for other services within the policy. Okay. It's how do you qualify for these types of plans? It's just like your traditional or any type of linked life with or annuities with long-term care insurance, and that is those triggers. The two triggers is the two. All right, the activities of daily living. That's when you need assistance with two of the six, and that is your bathing, eating, transferring, getting in and out of bed, that type of thing, right? Continence, toileting. Did I miss anything there? So the two of the six, all right, and then cognitive, right? So that is when you're struggling with Alzheimer's or dementia, Parkinson's, those types of things, all right. And that's where these policies will come in, and they'll have a trigger where you're going to need help for at least 90 days, and those are gonna put you in force. And just like anything, you have to qualify to start receiving benefits. Now, one of the things with these home care policies, a lot of times you can get them as a standalone, alone, and then or it could be a policy that comes with the home care, meaning any type of service at home when it comes to homemaking services, hospice services, intermediate, where you have physical therapists coming in, any types of services. Where you need help with your ADLs, activities of daily living, that type of thing. That's where these policies will kick in, and they're going to cover you. And the way that works is the benefit amounts can be anywhere from $1,200 to $1,500 a week. All right, so think about that. So if you got 52 weeks, and let's just say you're getting you're going to receive $1,200 a week. All right, that comes to giving you around $62,400 of a policy benefit amount for that year. All right, which is not bad. Let's just say you take out up to $1,500 a year. So that, again, is going to give you $78,000. All right, so it's going to cover you. Now, keep in mind, they do, if you wanted to, as an optional rider, you could get what they call simple or compounded inflation. As an example, like 5%. All right, so if it'll keep up with inflation and that type of thing. So let's just say you take it out today, and 15 years down the road you go to use it, it's going to grow because of having either one of those. Obviously, if you have the compounded inflation, it's going to cost you more. The simple isn't going to cost as much, but it's better than having nothing. It's really these kind of policies, you want to think like everything, what's a affordable, meaningful plan for you. It has what they call care coordination. A lot of them have that, and that's when you're going to need, where they'll help you they'll schedule, they'll manage, services for you to make it easy for you and your family. Because obviously, anytime there's an extended care event, that can become emotionally, physically, financially burdened to families, and that's why, having a plan in place, and that's where that care coordination comes into place. Pretty much all the policies have those today. When it comes to long-term care insurance, period. All right, you're going to find that's very available. And if your agent, he should have a lot of places, networks, and opportunities that he can help you when it comes to that in your own community. All right, I know as an insurance advisor, I'm very connected with all the home health care, assisted living, independent facilities. When it comes to community houses, adult daycare centers. All right, but they're out there to serve. And then when it comes to waiting periods, they're kind of normal, or what we would call elimination periods, and those could be 0 days, 20 days. They're They can vary, but a lot of those on the short term are like a 0 day. So once you qualify, you can start receiving benefits. So that's a nice benefit. If you wait 20 days, well, then obviously it's going to cost you a little less. I never see that as being a big difference in premium, though. Um, as an example, between the 0 and 20 days to wait before you can start collecting. The benefit periods can be 13 weeks. All right, I mentioned 26 weeks, 52 weeks. All right. So one of the things too now you could look at them as they'll help you from a cost point of view where you can pick out a daily increment. So let's just say for your benefit period, 30 days, 45 days, 60 days, 90, 180, or 360 days. All right. So let's just say you want some to cover you for 180 days, right? So um, that's very helpful and beneficial, and can be something that takes a lot of pressure and stresses off family members, and it for sure gives you a peace of mind that way. And then also that works on the benefit amounts too, right? I talked to you about earlier how you can also take those in increments. Say you want $50 for home care, and you for your facility care you want $200, and that those are daily amounts, right? So it's going to pay you that daily amount. Now, one of the things with these are almost always indemnity plans, cash plans, so they're going to pay you, right? If you want it sent to like a facility, you can do that, but a lot of people like the amount to come right to their mailbox, all right, or your guardian, whoever's kind of like looking after you, that type of thing. Now, one of the things with that, a lot of them have what they call restoration benefits, and that what that means that let's just say you don't use the benefit for 6 months. Well, it'll restore and it'll start over. Right. So, as an example, let's just say you had that benefit amount, and I had mentioned how you had the 78,000 a year, and you used, let's just say you used 30,000 of that. Well, that 30,000 would restore after 6 months, right? So it'd be like starting over for you. So that obviously is a nice benefit. They have spousal discounts. A lot of people, when you have a husband and wife and you go on at the same time, they have what they have a spousal discount. All right. So, nice feature. I think it's always good anytime you can get, a couple together to, you're going to get a discount that way. Another thing, when these policies are being written, you can do paper, but almost everything today, this is 2024, is done electronically. That doesn't mean that there isn't paper available. So if there's a time in need for that, then your agent should be more than willing to take the time. But of course, by the time it gets to the insurance carrier, it may not be as sharp and clean. If you have special writing like me, that is thank God for the electronic apps. If you know what I mean. You know how sometimes you can't read doctors? Well, I'm not a doctor. I'm in medical, but I'm a doctor in being the bike and dance and insurance man, so I can be a little shaky, and I've never been a superstar at my printing or writing. But, God blesses us in different ways, and so I do my best in practice, and I like to do everything electronically. And the carriers like that also. Okay, now as far as, one of the things that when you have these home health care policies or the facility policies, you can get what they call hospital. You can get these optional riders on there, okay, or what I would call riders that the insurance carrier will offer, all right? And so, there's anywhere from 4 to 6 big insurance carriers that are really A-rated carriers that kind of specialize in these particular ancillary types of policies based off what we're discussing today. And a lot of them have what they call a hospital indemnity. Now, something like that means that they're going to pay you cash if you end up in the hospital. So let's just say that just for the admission, if you end up in the hospital, you could get, for a qualified reason, you could get up to $3,000. There's different daily increments you can pick, right? So, and then if you're the hospital, let's just say you want, you pick. It could be 500, it could be 1,000, 1,500, 2,000, and that's going to cover you for your hospital stay. And outpatient surgery, they also have that. So if you're in the hospital, now obviously you pay additional for them benefits, but we know with the way the cost of medical care is today, and we're talking about high deductibles, right? I know from selling a lot of health insurance in the past that, a lot of it's passed on to the consumer, right, the insured, and that means the way you control costs is by raising the deductibles. Back in the day when you used to have a $250 or $500 deductible, well, today to be more realistic, it's more like $1,000, $2,000, $3,000 deductible, and then you have a 80/20 after that. So you're out of pocket max, right? If you're in the hospital and you have something serious happen, right? You might pay $6,000-$7,000 before that particular major medical covers you at 100%, and that's where these types of hospital plans, indemnity plans, come in place. And they're very cost effective, okay? Because they're cost effective, it's going to for sure give you a peace of mind if you end up in the hospital, because it's going to turn around and it's going to pay you cash right away, maybe to pay for those deductibles or any other reasons you need to use that money. And then they also have what they call, and this is a big one here, cancer, critical illness, heart attacks, right? Now, who doesn't know somebody that's always going through that, right? The cancer's a big one. I mean, it just, I don't know what it is, but all I realize as I've even gotten older, but I guess it doesn't have to play anything with age, because, right? It just, people, I think of my own neighbors, and I think of close friends in my small groups with cancer. They're being a lot more treatable today than they've ever been, right? But at the same time, when you have a cancer policy, it could be only a cancer policy in place, they're going to pay you a cash amount based off the type of cancer it is and the amount you choose to take out, all right? And then, of course, heart attacks and strokes, right? So you could get just a heart attack and stroke policy. And that, again, is going to be paying you a daily amount. It could be anywhere from $5,000 up to $75,000 for any of those. Let's just, and a lot of the policies do have the cancer, heart attack, stroke in there, and so that is for sure a peace of mind to, a lot of times you'll hear that in the market also as critical illness. All right, it's the same thing. Usually those are more in group settings when they call it critical illness plans. And then also with these types of policies, you can get what they call dental care, vision, hearing. All right, and so, a lot of times they work a lot like group plans, and they're going to, they could cover you for preventative right away. Usually you're going to have $100 deductible. And then, they're going to cover you anywhere from $1,000 per year or $2,000 max per year. So if you have a bunch of dental services done, those can be beneficial. Keep those teeth nice and clean. And when it comes to getting, eye exams and all that, they cover it. Eyewear, hearing aids, contacts, that type of thing, right? You're going to be paying a premium. You're going to either get a discount or you're going to have some type of a copay, a $10 copay to get an exam, just depending on the type of coverage you have. But then again, see, these are just optional riders that you can add to the policy or you can just get on your own, right? If you felt like you wanted to do that. So, it's interesting because we've talked a lot about how home health care or assisted living or facility care, which is for assisted living and nursing homes. Usually, when you have these types of plans, they can help keep you out of nursing homes. But at the same time, it does have that, and we know it's very costly. And so the whole peace of mind. Keep in mind, when you get these policies, you're obviously, you're going to give yourself some security there, but you're really doing it for your loved ones. All right, you think about it. When you do not have a plan, right, that stream of income's got to come from somewhere. Where's it going to come from? Who's going to take care of you? Is it going to be, usually it's a loved one, it's a family member. That's normally who it is. Or maybe you don't have a family member, so that's going to be a neighbor. All right, so, you take the time, you explore these kind of plans and, you go with, you go with what's affordable. And it's interesting. I have an Apple Watch and it just likes talking back. So, sorry about that. It's all good. Term life insurance. So sorry. Term insurance, right? A lot of these plans, you can get term insurance from age 20 to age 70. Some of them, I think you can even get a little older than that, but that's kind of the norm. After age 70, to buy term insurance, you're better to get some kind of a permanent life plan, a universal, or it could be a whole life. Because term lives, they term out, right? They're great when you're younger. Right? I remember when I got married, I had a wife and ended up having 2 kids. The term insurance came into play. Just from a peace of mind point of view, it was very inexpensive. And then, as time went on, I started locking in some permanent life insurance. And because I want to have that while I'm insurable and all that. So you can get term insurance. A lot of these plans, they have what they call final expense whole life. All right. And, a lot of those will cover you starting at age 45 to 89, 90. And those are like smaller face amounts. All right. So when I say that a death benefit is, I don't know where 2,000 comes in, that's not a whole lot, but they'll go up to 50,000. Right. And those are all normally simplified underwriting type policies. So getting right back to everything I've discussed, they're easy to, it's just a few questions. I mean, so if you've had, cancer or heart attacks or, something that a lot of times going to get just a permanent plan might be more difficult. These kind of plans are set up like that to get you insured. The other thing is what they call graded whole life, and those go from age 18 to 89. And that's like having a $10,000 to $150,000 policy. So when they say graded means that, and I find this interesting because if you die in the first year, right, you pay a premium, they're going to give you back like 10% of your premium back, right? You're not going to get the full death benefit right away. okay, but they grade it out over a period of time. Usually it's 5 years, and then after that, or it could be months, just depending, and then they're going to pay the full death benefit. A lot of times there are no medical questions to that, right? But if you feel like you're gonna die within the first year, a lot of people would think of getting their policy and getting something in place. Well, these policies are gonna basically they're gonna pay your premium back. But if you have it long enough and you don't die, then of course it'll pay out a full death benefit. I haven't done a lot in that, but I know there are, those types of policies that are out there. Um, so whoever your professional insurance agent is, advisor, your long-term care insurance expert, they're going to be able to find something for you. The other thing I had just thought about right now when it comes to home health care, there actually is a policy, they call it a membership, but what it does, you can buy into getting so many hours per week. I like it because they call it like a bronze, silver, gold, platinum. Well, being around ballroom dancing, guess what? That's the levels. Uh, so, what that means is that if you buy a bronze plan, they're going to give you a set number out of home health care hours. They're going to pay you so much. And what they'll do is, and if you go with platinum, you're going to get a lot of hours. And they roll over if you don't use them. And they'll even give you discounts in the first 4 years where, if you take the policy out at, let's just say 65 as an example, every year, whatever that premium is for that gold plan, they'll take 10% off it if you don't use it. All right. It's a nice feature. I like it because there's no medical questions to it. Absolutely no age limit to it. Right. And there's no gender. Right. Male, female, it doesn't matter. You're going to pay for a set amount. And then there's certain elimination periods they have after you use a certain amount of the hours, and then it keeps going until you used all your hours up. Right? Very cost effective. And, I also understand, I didn't personally write it, but somebody over 100 years old was able to get one of those plans, right? So if people are struggling with certain health issues, as long as they can get around on their own without needing somebody else to help them, right, where they can actually move and get around, they're going to get covered. So keep that in mind. Anyhow, I wanted to just kind of summarize things for you that there's a lot of options today. With 10,000 baby boomers a day, this is becoming very important and very meaningful to families and just as much in the business market. I just talked about these kinds of plans. You can, if you're a company, let's just say you have 10 employees, you could do a list bill, or you could figure out a way to at least bring some attention to these types of plans. It's going to benefit for sure your employee, but it's also going to benefit you. All right, there's peace of mind knowing that they have something in place and you're able to offer it. And depending on the carrier, you can offer that as a voluntary benefit also. You're not paying for it, but you're gonna make it available. So things to think about there. If you you have any questions, I can always be reached at, my email is vip@variousinsuranceplanning.com. go to my website, variousinsuranceplanning.com. This is one of my podcasts. A lot of times I have experts talking about all the different types of services when it comes to life insurance, annuities, and long-term care insurance in the individual and work site. I want to make myself available for you. If I don't have the answer, I deal with a lot of experts also. All right, and we will get the answer. We're here to serve and make a difference for you. And with that being said, I want you to enjoy your Labor Day weekend. Make great things happen. Be safe. And God bless.